Good morning, everybody. Happy Wednesday. And as usual, we're doing our live today, waiting for David Gazarian with the IQ Mortgage to join us. And while we're doing so, I just wanted to talk to you about today's real estate market and the mortgage rates. What is the latest news in Las Vegas, Nevada? What is going on? So let's start with the holiday season that is inevitably affecting our inventory and the way how the inventory actually functions and moves around in on the market. So we do see more new listings coming in, and we see that the listings are staying on the market longer, which is absolutely normal. So guys, don't be taking it as the indication of any.
Good morning, David.
Hi, Alexandra. How are you?
Doing great. How are you?
Doing awesome. Every day's a new experience. It's just another Wednesday morning.
Yeah,
yes.
Talking about the experience, I was thinking that, today we're probably going to voice a very unpopular opinion, and it is probably going to get some resistance. However, like we're not here to say what people want to hear or to say all the good news. We're here to inform the people of the real estate market and the mortgage updates. So the unpopular opinion is that we're experiencing right now, if we look at the stats, we're experiencing the fact that we have a normal house appreciation. So unlike all of the forecasts that were placed at the beginning of the year, and unlike the disregarding all of the news articles, there is no crash happening. Like it didn't happen this year, even though at the beginning of 2023, 85% of people who were polled, they were saying that, it is, 2023 is going to have the real estate market crash, which did not happen. Even the bigger companies like NBA, like NAR, everybody was predicting the prices to go down, and we were right now about to end the year with the positive price appreciation. The average appreciation is going to be, on average is going to be 5%, and in Las Vegas Valley, we're actually going to be anywhere between 6 to 9, depending on your area and depending on how high the demand is in your area. So unlike all of the predictions and those crazy articles, we're actually hitting the normal market. And I know that this opinion is going to be highly unpopular, saying that it is normal, like this is what the normal market most likely going to look for us. But our inventory is normal. Our number of the days on the market to sell the house is getting to normal. And I know that the mortgage rates are not super high. Still, we feel it is high because we're used to lower interest rates. But we have 2 out of 3 pointers saying that, that the market is normal. It's not crashing. It's not booming. It is normal. So would you say that it is going to be a new norm to have a between 6 and 7% interest rate for a mortgage now?
Alexandra, honestly, I was just talking to my wife today, and last night I was speaking with a client, and my wife did ask me, and I've been talking about this past couple of days, especially this morning. We had a long discussion. She was like, when are your rates going to drop? When is this going to get normal? And having learned what I've learned about the economy, there is, I've mentioned there is a possibility they'll drop the rates a little bit next September, just as a political trick. I don't hope for it. That'd be wonderful. There is a possibility they will lower rates in 2025. That's what the Federal Reserve Chairman has said. But now I'm starting to think, Alexandra, that rates may never drop. And when I say never, probably will stay like this for the next decade. And the reason I say this is as soon as there's such a big demand for housing, as soon as rates drop, the inflation will pick up at like it'll probably double what it was last year just because of this bubble, because of this expectation. There's so many people wanting to buy houses. It's just unbelievable. That bubble will burst. I think every house will have 5 buyers. What will happen is inflation will go up like crazy, and they won't be able to control it. So I don't think rates will be low for a very, very long time. That's just something that I feel, honestly. This doesn't make a case for me as a loan officer, but unfortunately, that's the truth, and that's what I feel.
I mean, like, unfortunately, we're not the decision makers of this market. We're just handling the message, and so, that's why I am fully aware that not everything that we say over here is going to have a welcoming, result, and it's going to make people feel better. But I would rather, people know the truth than feel the euphoria. So there is no euphoria. And if we look at the stats once again with the high mortgage interest rates, so if you guys go and Google the rates for the last 50 years, you will see that in the end of 70s, like starting from 78, the rates went high, they went double digits, and they stayed that way all the way till 90s. So the last time we had extremely high interest rates, they stayed for more than 10 years. They stayed like almost for 12 or 13 years, if I remember it correctly from the stats. I'll be happy to post it. But it stayed for 13 years. And this is, that's why if you are one of those people who is pushing away their decisions, hoping that the rates are going to go down, but if you have the ability and the opportunity to purchase a house right now, if I were you, I would rather own that house when the rates go down, if they will. And if they won't, you will still capitalize on your appreciation of the property. And instead of, putting that money down the drain, you're actually going to gain the equity in your house year after year. And once again, if you're going to, David, can you please talk to us about like the streamlined refinances for FHAs and VAs? Like, is it true that FHA and VA, when the rates go down, they have an easier way of refinancing that doesn't cost people that much as?
That's correct. They do. Streamlined refinance basically means that it's simplified documentation. We're not going to verify. We only look at your mortgage history. We don't look at any other liability. We don't care about income. We don't even care how much money you make. There's no ratios involved. Basically, and we don't look at the full credit report. We pull a simplified credit report only looking at your credit score and your mortgage history. So it is and there's no appraisal involved as well. So it's a very, very quick, cheap refinance. In the case of FHA, you must reduce it by at least half a point, go from 7 to 6.5, 6.5 to 6. So you've got to reduce it at least by half a point for the streamline to be approved. That's a must, which from the government's perspective, they underwrote your loan, Alexandra. They know the values there. They have an appraisal at some point in the past when you bought the house. So these things are your income was verified. And now if you're reducing your interest rate, you're improving your financial position. Your payment's going to be cheaper. So there is no reason to get another appraisal, another income verification, and calculate the ratios. So it's a much, much quicker, easier, cheaper transaction. I've worked with loan officers that have only done streamlines. So yeah, it's a great thing to do when rates drop.
And this is what I want to draw our listeners' attention to is that like streamline refinance is not such a scary process, and it is the process where you can take if you own the mortgage right now with the higher interest rate, the first opportunity you have once the rates drop, at least like David said, half of the percent. I would absolutely take advantage of it unless David tells you that we are in a down streak and you need to wait a couple of more weeks or maybe a couple of more months and drop it not just half of the percent, but drop it 0.75 if there is an opportunity to do so. Now, David, is there a limit to how many refinances a person can do for, a person can have for a loan?
The underwriter is going to look at how many refinances you do, and it has to be feasible. We do, as loan officers, go through a feasibility, and underwriters go through a feasibility checklist. So yes, you cannot. There are some call centers like the Rocket Mortgages and Quicken Loans and all those. They will be happily, refinance you every 3 months. But yes, there is a limit, and you can't just keep on refinancing because, again, there is no free refinance. There's still a cost that gets added to your loan. Absolutely, and especially FHA, a government loan, it's very protective of the homeowner. FHA is very, conventional is not so much, but FHA, so especially in the case of streamlined refinances, they will not approve a refinance if it's just, if there is no benefit to the homeowner, no tangible benefit, there's a tangible benefit worksheet that we fill out. The refinance will not be approved. So what we're going to do when rates drop, Alexandra, is we're going to tell our clients to wait, until they feel out the bottom. Not that half a point isn't good. It's good, but it has a cost. So wait it out 6 months, a year, feel out that bottom, then refinance so you only add one closing cost to your loan.
Excellent. And so the FHA and VA, they have the streamlined refinance, which is a cheaper process for those of our clients who actually have conventional loans. What is their option?
For conventional?
Yes, it's just a regular refinance.
Regular refinance. There's no simplified documentation, so you still have to verify ratios and income. During COVID, when rates dropped, people did a streamlined refinance on FHA loans without having a job. The bank never found out.
You mean they never asked?
They never asked.
Correct.
Exactly, and that's not going to be the case with conventional.
Okay, and this is probably to the adds to the point where people are worried if I buy the house right now and then what if the value drops when I want to refinance and I don't have the equity to refinance? So would you say that the streamlined refinance for FHA and VA actually addresses this this question?
To an extent, because there is no appraisal, so they don't know what the value is, if that makes sense.
So would you say that for those of our listeners who are worried about the process of refinance, just in case if they lose their job security or they, they feel like, oh, what if they're paying a lot for the house because the prices are still high? Should they be considering an FHA route in this case?
If your income's going to be a concern in the future, or if you feel that the value will drop in the future, that's something that we can give our opinion, but no one knows what's going to happen. Then yes, maybe just setting yourself up for a streamlined refinance, of FHA or a VA route is much better than a conventional. Plus FHAs are much cheaper today, Alexandra. I mean, we're locking FHAs at 6.7%.
Wow, nice. So
yeah.
Everything that starts with the number 6 is
I know, exciting.
Good news.
Yes.
Yes, and for those of our listeners who are not aware what is FHA loan, can you please tell us what is an FHA loan and what is the loan limit, and what does the loan limit do for the for the customers, why do we care about the loan limit?
I'm going to Google something. It's very interesting that you ask it today, because today the new number came up for next year. So the FHA loan limit increases to $498,000. It's not much of an increase. It used to be 492.
Can I pause you for a second?
Absolutely.
Can you give us the reason why it increases? Like,
yes, it gets indexed to the dollar, Alexandra. So as dollar, we have inflation and dollar loses value. They do increase that loan amount a little bit. So the buying power kind of stays the same year after year, if that makes sense.
yes, and the average price of the home actually increases, so they calculate for that as well. So they're making sure that you still can afford a medium priced home in the county where you live. So guys, whenever they increase the FHA, like whenever they increase the loan limits, they are adjusting for the fact that the medium sales price is not decreasing, it is increasing.
So conventional, you didn't ask, but I'm going to tell you, in 2023, the conventional loan limit this year was, as of yesterday, was $726,000. It's increasing for next year by 5.5%. It's going to be $766,550. So new conventional loan limit 766, 767. Wonderful news. This is like jumbo territory. A couple of years ago, it would have been unheard of. I mean, a couple of years ago, the conventional loan limit was like 619,000. Now it's 767,000. Talk about inflation, Alexandra. So we can actually, as of today, even though this new baseline is going to be active on January 1, as of today, we can originate conforming loan limits to 766, which means, Alexandra, if somebody's buying a $800,000 or $900,000 house, we will probably try and do a conventional loan for them, a regular conforming loan instead of a jumbo.
David, does it mean that that close of escrow, that purchase has to complete in 2024, or can you still
we could close now.
Finish it in you can close it in December using the 2024
yes.
That is wonderful. And I was just wanting to know, like, put a notice to it that wouldn't you find it interesting that they increased the loan limits just by the same number that the average house appreciation, like came at 5.6.
Yes.
like through the country. So, just letting you guys know the numbers, like you can tweak the information or you can tweak the message the way you want. And this is what I hear a lot of people say, oh, you realtors, you say this because your business depends on this. Yes, that's true. Our business depends on that, but we're still here for the long run. So we're not interested in giving you the message that is not going to help you, because we're here giving you the message that you need to know and that you need to act. And this message is not always it's not always a positive message, but today the message is that we are in a normal market. We might not like it. We might remember, and we will always remember the better times when we're talking about the rates, when we're talking about the prices. Like we all been in the situation where we had better home prices. We all been in the situation where we could have bought that house, like for $80,000 for. Sorry, guys. We all have been in the situation where we could have purchased that house for $150,000, depending on how long you've been living in like Las Vegas, correct? But right now we deal with what we have, and so that's that's where we at with the rates, and unfortunately this is the new normal that you can either take advantage of right now. And the reason why I'm saying that
you can take advantage of it is because not a lot of people are ready to accept it, that this is the new norm. And a lot of people are still confused with the message out there. So that's why we have sellers who are back to offering some of the closing costs. But at the same time, guys, as an active realtor with the buyers out there on the market, I can tell you that throughout all of the, across all of the price points, we are looking at the multiple offers on numerous homes. Like with just Ben, I had 350 being in the multiple offer situation. I have 500 being in the multiple offer situation. So guys, it is the market is normal and people are still buying and selling. Yes, it takes a little bit longer on average. It is not like the pandemic, but it's not, hopefully it's never going to be back as the pandemic, and you don't have to, you don't have to deal with that crazy of a market, the artificial increase in prices or the artificial, artificially low interest rates, because everything that we're dealing with right now is the adverse effect of the pandemic markets. And David, can we go back to the question on the difference of FHA loans, conventional loans, and VA loans? We talked about the loan limits, but could you tell us a little bit more about the about advantages and disadvantages? Let's say if what is the minimal down payment? What is the minimum amount that, like, if I only have, let's say I'm counting on my tax rebate or the tax back money that I'm about to get in January or February, what would be the most advantageous loan for me to go for? Like, is it okay for me to use the tax money? The IRS money that we get back on?
Yes, it is. Absolutely. The IRS money is the most clean money that the bank will accept. So that's a great asset to have to show in a deposit, so to speak, in a bank statement. So absolutely you can. The difference is, Alexandra, out of the VA, FHA, conventional, I would say VA trumps out everything. And VA is a privilege. That's privilege for serving the country. It's a wonderful loan. You could get a VA loan with zero down. It has no mortgage insurance. So those two things alone make it very, very good loan. Just because it's cheaper, it's got a lower rate. We call them govies. VAs and FHAs are govies because they're government loans. They're conventional is a bit different. It's an agency loan, but govies are cheaper. VAs, FHAs are currently in the 6s. So someone that has served and is eligible is a wonderful loan to have. Yeah. So FHA, like I said, VA has zero down. FHA starts at 3.5% down. Conventional, in some cases, there's an asterisk, 3% down, but most of the times conventional is going to be a 5% down program. Conventional interest rates are in the 7s. FHAs and VAs are in the 6s. FHA has a mortgage insurance. If you do, FHA is going to have a mortgage insurance no matter how much down payment you put. The conventional will not have a mortgage insurance if you do more than 20% down. So again, differences. And when someone applies with us, we do look at everything. What do you qualify for all three? There is no assumption that one is better than the other. At the end of the day, as a loan officer, it makes little difference to me what loan to do. I have no vested interest to do this loan versus the other, Alexandra. But for our client, they're interested in the lower monthly payment, the cheaper monthly payment. So we're going to look at the cheaper monthly payment. Sometimes the conventional is going to be cheaper, even though it's got a lower interest rate. That's in some rare cases. Sometimes a person would prefer to do a conventional loan, even if they qualify for a VA loan. So there's so many different cases that you gotta do the work and lay the numbers in front of your client and let them decide or help them decide what's beneficial.
And I think
Ultimately,
one of the things, sorry for interrupting you, but this is one of the things that most of the clients comment for me and they appreciate about you and your team, that you guys actually lay out all of the options and you make it, you make this, scary conversation, the scary mortgage
yes,
because
yes,
it is so comfortable for us to throw all those terms at our poor customers. You know, like
yeah, I know.
we swim in those terms, and we can give classes on FHAs and VAs and conventional loans and all the ins and outs, but for our customers, we understand that it is like once in 5 to 7 years you go through the process, and it is extremely and crucially important that whoever you work with can actually explain it to you in a simple human language, lay it down on a piece of paper and explain it to you in numbers and simple terms, so you don't have to be confused, you don't have to be frustrated, and eliminating this confusion and ambiguity from the process. I think that is the key to our success. And this is the key to our loyal customers who keep on coming back and referring their friends and family to us, because they know that we break down the process for them to the deepest detail as much as they desire. And some people tell us, like, don't do that. Save our time. We don't want to know. We just want the house. We don't want the knowledge, which is fine as well. But, you know, like this breaking down to the smallest detail and helping people make a decision, because one of the other things that I usually say is that we cannot make the decision for our clients. We can only guide them and provide you guys with the information, and this is what—
Well, we're not allowed to make the decision for our clients. It's illegal. So all we could do is provide information, as much information as possible for the client to make an educated decision for themselves.
And look and actually ask our clients the most important questions, because something that I notice a lot is that when people zoom in on their monthly payment, they might not consider their long-term plans. And a lot of people are only thinking, oh, how am I going to make the monthly payment, instead of instead of forgetting that what is their 5-year plan and what is their 10-year plan, because we go with that, like we go through those things with the first time consultation with the buyers, or especially, let's say, when I have young families who are saying, oh, we're gonna go with the 2-bedroom condo, that's just enough. But if in 5 years they're planning to have 2 or 3 kids, that is not going to be the best decision making. And we go through those conversations, and we make sure that whatever decision you are making is actually going to serve you better in a long term, like not just today and tomorrow, but 5 years from now and 10 years from now.
I concur.
Thank you. David, is there any more good news on the horizon from the mortgage standpoint?
Not really. The past couple of weeks, rates have slowly dropped a little bit. This is not the drop we're looking for, but they have slid a little bit. And this obviously ticked up the number of mortgage applications. Very little, like it's in the decimal points. But again, the industry tracks it, and the good news is rates are not higher, rather slightly lower. They're still in the 7s, which is horrible, but that has an immediate and direct effect on the number of applications throughout the country. So the applications are higher. People are applying for loans. People are hungry for good low rates. Good news, Alexandra. This only means that there is a huge number of people that are waiting to buy homes. I've said before, there's 4 years, for the last 4 years, most people haven't bought homes since the pandemic started. There has been this number of people that are waiting, and that group of people that are expecting to buy something is growing. And I think we're all hoping for the rates to drop. The rates will go down. I mean, they're not going to be in the 7s or 8s, but they're not going to be probably, we won't see rates in 3s or 4s. I have a feeling there'll be high 5s, 6s, and they'll linger. And I think what will happen, Alexandra, is people will come to terms with it and acquire something, because even at those rates, prices are going to appreciate. And it's just a matter of time until you accept the reality of things and stop fighting it and start acquiring something, because prices are getting away from us faster than we're able to improve our income.
I agree with you 100%, because we just went through the year where we had the highest interest rate in the matter of the last 23 years, correct?
Yes.
And we still, and please hear that, guys, we still end the year with the positive price appreciation. So,
can you imagine?
Yeah. Yes, I can see it, David. I can see it, and that's why I think that it is important to tell people that this is exactly what is going on. You read read those headlines, and people are saying no. People are signing leases all the time. Hoping that the prices are going to go down. They're hoping for the crash. They're hoarding the cash that is being, that is losing its power to the inflation. And people are saying no to themselves, to their, to their family wealth, to acquiring the wealth, and to becoming homeowners, just because they're hoping for something that is most likely the illusion. And when you look at the numbers, when you look at the things that are actually happening, yes, I can't deny it that we have the least number of homes exchanging hands this year. And it is understandable, because some of the homes that we were closing were at the rates of close to 9%. And this is ridiculous. This is crazy. And it feels wrong to us, but owning the house never felt wrong, and owning the house has never been a wrong decision. So that's why, even in the year of the highest interest rates within the past 23 years, we experienced the positive home appreciation, guys. So can you imagine if the interest rates go down next year? What do you think is going to happen to those homes? And what do you think is going to happen to the equity of the people who bought this year, or who are going to buy in the nearest future? David, what is going to happen to their equity once the interest rates go down?
The prices will explode. Equity will just skyrocket. When I say skyrocket, it won't be less than 2021. So 2021 was about 15-20% increase per year. Quite frankly, quite possibly, it's going to be higher than that. It could be. We're going to find ourselves in a situation where it hasn't happened before. It's impossible to predict. I won't be surprised the prices go up 50% every year for the next 2-3 years. It sounds ludicrous right now, but that's what you will have when 4 years people haven't bought homes. The number of people that want to buy homes has accumulated for 4 years, but we have been under building homes since 2008, since that previous recession. So this country has an inventory issue, has had an inventory issue since for the last 15 years, plus add the pandemic and this high interest rates that people are waiting and they're not buying, and add the fact that whoever has 2-3% interest rate, those people are not willing to sell those houses. They don't need them, but they don't sell them. So now you have people that will not sell their, I will never sell my homes with a 3% interest rate. Does that make sense? So you've got this huge chunk of real estate that should hit the market, and it's not hitting the market. We have been underbuilding for the last 15 years, and we have 4 years of, since the pandemic started, people have been waiting to buy homes. So that's going to be the perfect storm. That's what I see, Alexandra.
And I hope that we don't experience like the 50% appreciation just from.
I hope so too. It'll be horrible.
I hope that everybody, like it's my personal goal that everybody that I know in my circle, they at least own their own house, and they, like they gain the equity for their families, for their kids. But one thing that I would like to mention and to add to what you just said, we have 37% of homes in this country that are owned free and clear. So this is for those who are waiting for the big crash. 37% of homes are owned free and clear. So even like no matter what happens with those prices, those people own those homes like there's no mortgage on them. Then we have a huge generation of millennials and a huge generation of Gen Zs that like David said, for the last 4 years, they're sitting on the sidelines. They're trying to tap into home ownership, and they're waiting for it to happen. They're waiting for it to, like they're waiting for the sign. They're waiting for the sign that it is the time to buy. And I see a lot of those, I see a lot of those young families that are buying, and I'm very proud that they're getting the advice from their parents and grandparents who went through certain.
And these high rates are not scaring them, right?
Absolutely not. Absolutely not. All of my 60 plus clients, they, they keep on telling me, like they're like laughing. They're like, oh, we bought our first home at 9.7 interest rate. So, we would take 6.75 in a heartbeat.
Yep.
Through the, just because you and I, we speak the second language, we speak Russian, and we contribute to a lot of the post-Soviet immigrants who came at a different time frame. So when we're working with them, and I tell them about like how high the interest rates are, they come from the countries where the average rate never been in single digits. So to them, it is like the greatest of the things. So if you guys look outside of our little box called United States and compare to what is going on to the world economy, we're not in a bad position. Not yet.
Oh, not at all. No, not at all. So in conclusion, Alexandra, what I was going to tell you is I came to this realization that, now the majority of people, like we discussed, they're waiting for rates to drop so they could buy something, right? And rates will drop. The government understands that the need to create some kind of affordable housing. The government's job is to make that available. So some adjustments will happen. But as most people, basically the rule of investment is do the opposite of what the most people are doing. So now most people are waiting for the rates to drop. My fear is that when rates do drop, we will come to a realization that they should have bought when rates were higher. And again, I've said this before, is because the prices will skyrocket again. So I know it's unaffordable today, but it's going to be more unaffordable when rates drop. And it's always going to be unaffordable. And unfortunately, it's just, there's no perfect storm that will be like, all right, well, this is a perfect price, perfect interest rate. I'm making so much money. I've got credit score in 800s. I got a 30% jump in. That's never going to happen, in my opinion. And when rates drop, another problem will arise, which will be the price increase, rapid price increase, low inventory. people overbidding for homes like they did in 2021. It's never going to get, unfortunately. I'm in a little pessimistic mood today, or let's call it realistic mood today.
Well,
so that's what I wanted
here's the
to
reality, David. What happens if the rates don't drop? The prices will still keep on going up. Not
slowly, but yes.
Yeah, not at 20%, not at 50%, but they will keep on going up slowly, which this year is the exact proof of it. Now, let me ask you, is your salary increasing at the same rate as the, is your income increasing at the same rate as the price grows? That's number one. So even if the interest rates don't go down, the prices are still going to increase. So whether you wait or not, this is still, this is still the reality. And one more thing about waiting for perfect timing, trying to time it, here's what happens. We will not know that we were at the peak or at the bottom until we get the data. And even us following the, like you and I, we follow the data like hawks. And we only like these most recent data that we look at is 30 days back. So trying to catch the perfect timing, you need to be, you probably need to be a sidekick, because to know that you bought at the bottom is only when you look back. And majority of the time, the bottom, like when we can conclude it was the bottom or it was the peak, it would happen only like 6 months past the fact. So once again, you can only figure out that it was a good time or a bad time 6 months after you've done something. So if you want to take your chances and wait for 6 months, go ahead and wait. And for those of you guys who are actually making sense of what we're saying, or who needs a personal consultation, who needs to, if there are questions left, and we always appreciate your questions in the DMs and in the comments. So if there are any questions left for us, we're happy to respond to those questions. I always post our information, so feel free to reach out. If there's anything that portrays to your private information, make sure that you reach out to us directly and don't post it publicly. But we're happy to help. We're here to help. And if anything that we said today on this live triggered your attention, guys, feel free to contact us so we could explain it to you individually and help you make that decision.
Thanks, Alexandra.
Thank you so much.
Great live.
David. Have a great day.
All right.